Then I'm going to. Sure. Yeah. Yeah. Okay. Kelly. Uh, and you guys kind of introduce yourself after I turn the time over to Andrew. And okay. You want? No. Session here. big the simple way. And it's inflation rate, unemployment rate. So you add those two together. I mean, together, average is, and what's it called when this happens? When you have high unemployment and high inflation. So bad economy, but your bills are going up every month. What do we call that? We do call it misery. That's why it's the misery index. Stagflation, right? It's kind of the worst of both worlds. Your costs, but you don't. Job isn't paying you nearly 1.9%. So 9.3 is the average. You know what it is? 6 point. So one of the which probably continue. It does not necessarily. It's a pretty good, pretty strong economy now. Volatility in. Very, so little information. Normally, we bring people in here that we know. We know what they do. We've had a long-term experience with them. Comfortable. I have no clue what these guys are going to talk about in two perspectives. First time I met them is just recently in the last 10, 15 minutes, number one. And number two, I have no idea what cryptocurrency, how it works. So being a little there, but we thought this is a topic that's of interest to a lot of people. And they came highly recommended by a client of ours who is also a good friend and an attorney, and we sublease to him. So they're coming from that perspective. And we don't know anybody in the industry. We haven't been involved in it. We don't. My way of saying, don't know these guys, but they've come highly recommended. And so I'm washing my hands of whatever they say. So I'm going to turn the time over to Andrew, and he's going to hear. And I'm curious.
Crypto capital investments. That's that. So just jumped in all in 2013 and has been riding the wave ever since. Caught on to this new kind of thing of wanting to jump in, do altcoins, do different types of currencies, and kind of master it. Really understood where we are and trying to really grasp it. A huge piece of this massive part of it. So without further ado, we got a couple other key parts of the team.
What's going on, guys? Thanks for having us. First off, I'm with Martin. background in wealth management. I used to work for FXCM, FX and derivatives broker. Got into crypto assets last year, and have since built an online community of about 150,000 people who listen to me for technical analysis, trends, insight, pretty much any information about building ICOs and stuff like that. So,
my name is Musa. I am a full-time cryptocurrency trader and investor. I was previously doing CAD/CAM design in the jewelry manufacturing industry. I'm working. My history was an algorithm trader. Was planning on creating my own hedge fund for equities using algorithm trading by Andrew. And I got into the crypto space in September and have just been so intrigued by technology and potential. So I decided to forego the equities, algorithm trading, and apply some of my expertise to an algorithm that trades.
Hi everyone, I'm Lawrence Corey. I'm one of the general partners of Crypto Capital Investments. I've been in crypto since 2017 and currently I own and operate 10 gas stations. So I come from a rural background and so look forward to seeing your talks and throughout the presentation.
Awesome.
Thank you.
Alrighty, so we want to do a quick rundown of everything here and give everyone kind of the full aspect of really where we are in the market, what blockchain is, what Bitcoin is, all these terms that everyone's been hearing on the news the past few months. So we want to start off with a few things. Everyone's asking, hey, got a few questions. Is this a bubble? Is this the next thing that's going to blow up? Are we in just a different market that we've never seen before and it's just going to burst and we're all going to be part of it because we just want to dip our toes in? We look at it and say, no, this is an interesting new market. This wasn't created by VCs. This wasn't created by hedge funds. This wasn't created by wealthy individuals. This was created by communities that believe in decentralized focus to reshape an industry and a market that's been either tainted or been affected in a global scale to not that big of a use value, especially in countries like Venezuela, Zimbabwe, things like that. So we realized that not a lot of media has been talking about this in a kind of a clear sense. We want to give everyone a kind of a clear understanding, really the background understanding of what blockchain is, what cryptocurrencies are, and the whole thing. So, how do I move to the next slide? Alrighty. First question is, what are cryptocurrencies? To answer the question, and fully understand cryptocurrencies, we must first examine the history of money. Just want to give you guys a quick rundown. It all started people trading, bartering, getting there, going to trading resources, cattle, digital money, whatever it may be. It's all started with the gold. It all started with basic understandings of these 6 points. From cowrie shells to metal coins to leather bills, fast forward 200 years, gold was made the standard of value throughout England, throughout the world, and we have the gold standard here in the United States. This allows for a non-inflationary production of standard banknotes, which represent a certain amount of gold. After the Great Depression in 1930, the gold standard was revised, and the price was devalued. Later, the gold standard eventually. To point this out, it's not to bore you with the historical facts, of course. It's to show you that money has continuously changed throughout history. And we're at those points in life where we look and say, what have we came from, and what is the potential for the future? Because we know, to a certain extent, that not everything is perfect. And we agree that cryptocurrencies and where we are in the current state is an imperfect market, as well as where the dollar system is. It's not perfect. We're seeing inflation, we're seeing all these different types of market situations. So that's really where we stand on that. Second question, what gives money value? I can write my name on the piece of paper and tell you it's worth $10 million. At the end of the day, it's not really what it is. There's agencies, there's this, there's that. There's value stored in each one of these items that we think has a value. A lot of people have been selling rocks on the internet, and they say it's worth $700, $800. It's a value of what we make it. But when we look into money, what makes it value? We start with these characteristics: a limited supply, durability, transferability, divisibility. Can I basically divide it? How many supplies going on? Is the inflation going to keep going? Are we going to keep printing money at a hyper rate, or what's really going on? Can I transfer it easily? Can I give it to you and it can be completely transferable? Is it durable? How accessible is this money? The big thing with divisibility, a lot of people don't know that. One thing to say was 0.2 Bitcoin. So Bitcoin, as well as every other currency, is divisible. You can have 50 cents, you can have 100 coins, whatever it may be. It's all in that aspect. And uniformity. Basically, it's one thing. It all works the same way. If there's a system similar to cryptocurrencies, it's similar to the dollar. There's $1, $5, $10, $100. It can all be divisible and make it all work. Where are we? Let's see here. Alrighty. We see the value of national currencies fluctuate and sometimes experience hyperinflation. One of the causes of hyperinflation is the large government deficits financed primarily by excessive money creation. Many countries around the world, like Zimbabwe and Venezuela, are suffering. It will cost me 50,000 Venezuelan bolivar to buy that bottle of water sitting on that table. It gets to be pretty wild where we think, where are we in the global economy sense of how money is being printed and how hyperinflation is really taking a global effect. Before we dive into cryptocurrencies, guys, I wanted to show you how helpful it is that internet has really transformed where we are today. The written word, such as the physical peer-to-peer. Later, that was created with centralized services such as the post office. I can deliver notes, I can deliver mail, a package anywhere in the world, and I can create a letter from here to Egypt, and snail mail can get there as fast as it can get there. Then we look through protocols that have kind of been revolutionized. We can now go through email, we can go through text, we can go through all these things. We look at voice. Again, it started with physical peer-to-peer. Later, they created a centralized service that we could speak through the telephone lines and cell phones. That was a big breakthrough. Now, value. It started as peer-to-peer. Later, there were centralized nodes, such as government currencies and banks that allowed the transfer of value. The question is, what comes next? And here we go. What are cryptocurrencies? Cryptocurrencies, and I go a little slow here, are money or value over internet protocol. They follow a peer-to-peer transfer of value without any third party. There's no bank, there's no centralized agency that controls it, there's nothing. It rolls on its blockchain and the technology that supports all these cryptocurrencies. It runs 24/7, 365, and the transaction will happen within minutes or even seconds from a very nominal fee. Cryptocurrencies are decentralized. As I said, there's not a single entity or group that control it. They are continuously secured by a network of computers around the world. So when anyone ever tells you, is Bitcoin, can it go to zero? Only way Bitcoin goes to zero, or any crypto, and the entire Bitcoin economy goes to zero, is if the internet protocol completely dies. I always tell people the last thing you're going to worry about is Bitcoin going to zero if internet fails. It's going to be a much bigger problem on a global scale. Limited supplies. For example, there's 21 million Bitcoin that are ever going to be created in this space. Not any more, not any less. 21 million. We don't keep printing, it doesn't keep going. In the code it is written, that supply is always going to be set. So therefore, it can't generate more. Global and near instant. As I said, if I'm in Zimbabwe or I'm in Egypt or I'm anywhere in the world, one Bitcoin is always going to have the value of one Bitcoin. So I can transfer that anywhere instantaneously with a simple picture of a QR code. A string of codes that holds your keys to that access of money. It's secure. The blockchain technology, which we're going to go through in a little bit, will also tell you guys how secure it is. Everyone talks about how the hacks of certain situations have been happening. This is hacked, this is hacked. The Bitcoin protocol, the blockchain technology, cannot be hacked. What's being hacked is the security protocol of people that hold their wallets, people that hold security protocols that don't follow a sort of high-end understanding of really. Allow online payments to be sent directly from one party to another without. The foundation of these cryptocurrencies is, in essence, the blockchain technology. Unlike most networks today, which rely on complete database can yeah.
They, what happens is there's of let's call them computers. They're miners that are going to solve a complex algorithm, a mathematical problem. When they solve that, and every other computer the correct answer, that you is verified. They have the balance. They make sure the balance has been transferred to you. That's solidified in a block to the blockchain, and then they search for the next kind of transaction. So every single thing is transparent. Imagine if someone tried to kind of do a chargeback or fraudulently, try to send you something. When the miners are kind of checking that me and you have that balance, that transaction would be added to the blockchain, and that block would. Correct. You have a public address, which is a bank account number, and then you have a private key, which is pretty much associated with your bank account.
And those two things are required for me or anybody else to see that's inside a key.
So everyone can see your public key.
either have it remembered in your head, or you can have it on a piece of paper. You can have it whatever it is. My name transfer immediately. We refer to blockchain technology. This right now. Some people. Bitcoin was up over 1,400% over the year. Even more impressive was the alternative crypto asset market, up more than 17,000%. The numbers of projects increased and the entire market was finally taken seriously. We see that on a larger scale, CME taking a pace, CBOE, the Ameritrade. Logical question that everyone's been asking. In relation to global markets, Bitcoin and even crypto assets as a whole are still a small portion. Bitcoin is used as a digital gold, a store of value, along with being an efficient way to send money across the world. And it's only 2.5% of the market of gold. The market cap of the tech bubble, if we put that into perspective, was $6.5 trillion. Everyone know what the crypto market is today? $500 billion, $500 billion. That's where we are. So I'll show you where Bitcoin is in the market cap sense. We're there. This is gold. This is all the crypto assets together in the monetary use. So we look at everything and say, are we in a bubble? We're nowhere near a bubble. I'll tell you that. Nowhere near it. And we're seeing that entire economy of the global cryptocurrency market up. It's all in December, jumped to 8 billion. More use cases, more different people entering the market, with more institutions entering the market, seeing that this market could be a $6 trillion market. It could take a 1% of golds, or it could take any sort of percentage out of the global economy, and it could really make a dent in the whole global economy. The volatility of crypto assets isn't new in the global markets. It just moves much quicker. From 2000 to 2002, we saw the NASDAQ correct 78%. Dow Jones corrected 46% between 2007 and 2009. The volatility of these market cycles, but on a much shorter time frame. So we look at that, and we see where we are since the beginning of Bitcoin. Dow Jones, NASDAQ, and then there's Bitcoin. So all these little volatility that's going on in cryptocurrency, especially in Bitcoin, are occurring, that have occurred throughout traditional markets. So we look at that and we say, okay, is this related to global markets? In some ways it is. I think we think it's not, because it has such a stronger force than all these global markets in the way that it recovers from these volatility spikes. Bitcoin is up 60% in the last week and a half from its kind of so-called crash, what we call a correction. It's a digital market cycle that's taking effect in a digital asset class. Awesome. So we're crypto capital investments. We're basically giving the average for Silvergate for being whoever's here from Silvergate. That's our bank, actually. Pretty awesome. But yeah, so crypto assets. A lot of people are asking, so I really don't know what's going on. I can sit here for 5, 10, 20 hours and explain the basics of cryptocurrencies and crypto assets and blockchain technology. At the end of the day, we're giving our clients exposure to this market. We start off with things. A diversified portfolio. We take the top crypto assets in the space and we diversify that out of how we're going to take the best projects in the industry. Coins that are worth 0.02 cents, have no use value, that are created some random high in the middle of nowhere. We're taking the best of the best and putting them into a portfolio that can really, really every other base of competitiveness in this industry, because the way this market's growing, I believe that it has a monumental force. Mr. Luke to explain a little bit about ICOs and the market in general.
So yeah, guys, there's 4 kind of key strategies in the portfolio. And before I Apple and a lot of other companies, billion-dollar companies, that's going off the and illegal to see it becoming something else, you couldn't have all those funds used and then just stop it in the direction. Benefits of always cryptocurrencies require a lot of electricity. Is that correct? Or?
I think it is. But in relative terms, people also say cryptocurrencies are too volatile. Or all this. Whoever kind of says that didn't study modern portfolio theory. If you look at crypto assets, let's say it's 1 or 5% of your entire portfolio. That would actually mean your portfolio is probably less risky, just based on your completely different correlations, completely different risks. It's exposure to different risks and things. So I don't think electricity. I've also read the counter article. I don't think it's as big as you would think.
Isn't that kind of where the trade fee comes in, really? Is because you're actually the miners are the ones taking the risk in investing electricity into producing the token. So in order for them to get the return on their investment in the hardware and electricity, they're taking the fee.
Yeah. It's in a way, it's like, what does it cost the U.S. government to make $1? It's extremely small. They're just printing paper. So this is, there's also a proof it's called proof of work. So that's also another thing that gives these things value is it costs money to make a Bitcoin. There's a dollar amount of how much the electricity and the equipment all costs. So you can't just print it freely, let's say, if things slow down. That's the ICO portfolio. So it's investing in these new cryptocurrencies that are launched kind of with different use case models. Bitcoin's use case right now is a store of value. It's kind of a digital gold. It's way more effective than gold because I can't send you gold across the country or across the world, and it's not instantly kind of verifiable. One of the other strategies in the fund is arbitrage across exchanges. So since it is such a new kind of marketplace, this crypto asset space, there's exchanges across the world. So there's a few in the US, there's also exchanges all over the world. In traditional assets, there's a lot of banks, and they've been developing algorithms to make the markets as efficient as possible. So those inefficiencies are kind of gobbled up very quick. In crypto assets, it's not the case. Sometimes you see Bitcoin on Bitfinex or Coinbase trading $3,000 or $4,000 higher than the other for hours at a time. So those algorithms are able to take care of that kind of automatically. And then
yeah, so that's a major piece of our fund is we're really focusing on the imperfectness of this market. We do understand that this cryptocurrency market is in its infancy stage, and with infancy comes the ability to really take advantage of market inconsistencies, and we really focus on that. And because we think that, as he said, there's days where you could have a 20-30% arbitrage, or you could have a 2 to 3%. But 2 or 3% compounded daily, we all know what that comes out to is a couple $1,000% a year. We're extremely excited that could really take off because, as I said, with all these newer markets and all these newer coins, we're seeing the market in itself, the exchanges itself, not have full consistency. An exchange in Mexico can be a different exchange in the U.S., and 3 different exchanges in the U.S. are going to have prices that are completely different. So with our algos, and we're really excited for this to take really a real big effect into the trading portfolio.
So is in your fund, what you're trying to, buy low, sell high, right? So you're using and moving amongst the various cryptocurrencies to try to, sell off of one and buy into another. Is that the theory?
So we're constantly going to be having a diversified portfolio in the fund. We're going to constantly be rebalancing the portfolios depending on market conditions. So we're thinking that we're going to have a bigger base of diversified positions that are going to have long-term value, and then we also put in intraday trading in a lot of the factors of what we're doing. So as a position becomes similar to trading equities and everything of that sort, you got to either get out or get in. It's simple as that. It's a market strategy. It's a trading strategy to kind of get into.
Yeah, 2 questions. One is more on market indicators and trusted places for that information. So where do you guys get your information? What indicators tell you, what cryptocurrency to get into and when to get out?
Yeah, so that's exactly what I do. So that's an interesting I'm glad you brought that up. If you look at Bloomberg or you look at CNBC here in the States, they have guys on there that are kind of comparing it to gold, or they compare it to other assets, and they say it's going to go down to $900. Right now, there's not really a kind of a trusted source like a Bloomberg or a CNBC for crypto information. I would say Twitter, honestly, is the best source. And it's just because, like this currency and this technology is decentralized, it's all peer-to-peer, those are where the best analysts and kind of minds are all kind of interacting and sharing their thoughts. So that's kind of where I started my brand, and I have now 150,000 people that I kind of push my research out to. But yeah, I mean, I was on CNBC in January, kind of trying to share that exact same thing. There's a lot of people that don't really have any sense or read into, what's an addressable market for Bitcoin, the remittance market, or what's an addressable market for Bitcoin, offshore banking, it's a Swiss bank in my pocket. They never really even think about the addressable market there. They just kind of, I don't think they understand where it gets its value. So that's where I go. A lot of people share their research on Twitter.
Yeah, it's interesting because there was, I can't remember the name of it, but I messed around with it for a while, and you definitely see people who just turn on their YouTube camera and start talking, and like, where are you getting this information from? But yeah, like, understanding like the indicators and everything is something I was definitely like interested in learning. Is like, how do you identify when there's an opportunity or when something's coming up? But then the second question that I had was on the blockchain accounting side of things. You said it leaves like a trail or like a record of every transaction. Well, then you hear about these hacks, and my question is, how can you not trace that, where that hack is coming from if there's this blockchain?
Yeah. So every transaction is recorded forever. If I send money to you, it's recorded forever on the blockchain. You can always go back. You could be a blockchain forensics kind of analyst and look back. Every transaction is recorded forever, and once it's solidified on the blockchain. When an exchange is hacked, because when an exchange holds your funds, it kind of goes back to the legacy system. You're no longer in control of your funds. You don't hold the keys. The exchange holds the keys, and they're holding it in their vault. Their vault, they didn't do enough kind of due diligence, and they got hacked. The thing is, you could see where those funds go, and a lot of times they can. But that fund, that account number per se, your public key, is just a string of digits. So it's completely transparent, completely open source. Everyone could see where I'm sending money to and how much they're sending and all that, but it's not Luke Martin on the account. It's a string of digits starting with 0 and ending with XYZ.
But like in the instance of like fraud or some massive, hack where hundreds of millions of dollars are stolen, I mean, are they able to then go back in and do some forensic accounting and identify who that person is, or is there any way to do that at this point? Because I see that seems like a huge upside if you can protect against fraud, right?
Yeah, I mean, it's actually going to eliminate fraud in a lot of spaces. So Enron never could have happened if there was blockchain, if they were using the blockchain technology. The fact that companies have to kind of produce quarterly reports and CPAs like yourselves have to jump in and kind of dissect those numbers, this is going to eliminate a lot of fraud because everything is going to be public. Everything already is public. Everything's public for my business if you knew my account numbers. For going back, that's kind of also the value add for blockchains is code is law. So once I send you that transaction, it's confirmed, there's no chargeback, there is no rollback. So you could find out, and they found out some of the Mt. Gox funds, and they found some other ones. They know where the funds went, but then it would be a case of those countries, wherever those people reside, kind of prosecuting them for the fraud that they committed. It's actually, I think of it more as eliminating fraud in a lot of industries. I mean, it makes everything transparent. There is no more cooking the books. There is no more any of that. Everything is open source. Everything's transparent for the entire world.
And that kind of emphasizes, the choice you make in how you secure your private keys.
Yeah.
You never want to really leave them out on the internet or wherever. I mean, there are devices that you can purchase for pretty cheap to store them locally and redundantly, so that you have them permanently in a couple of different places that are air gapped from the internet, right? Mm-hmm. So they're not on the internet anywhere, and they can't be stolen that way. It's pretty much impossible.
So it's the hacks that we hear about, the $100 million hacks. Those are the exchanges, and that makes more sense. Okay.
Yeah, it's an exchange.
And they can identify the person if they look into it. It's just
correct.
Jurisdiction is the issue right now.
Yeah, a lot of hacks happen on Twitter, right? So someone will pose as a fake me, or a fake Charlie Lee, or a fake prominent figure in the space, and let's say, send me Ethereum, send me Bitcoin to this address. I know exactly where those funds went. I could actually track where they spend all those money, where they spend all that money too. It's just a string of digits, so I don't have the resources to go after them, and it's usually a negligible amount anyways. But yeah, it's completely transparent. Everything's out in the open. As opposed to something going to a bank, I'm never able to see that. But anyways, getting into the last kind of strategy for the fund is technical analysis. This is what I specialize in, talking about those indicators, where to look for. This is kind of how I built my brand. I come from an FX background, so this market trades very similarly to FX. It's just, Chris talked about that kind of...
Define FX.
For foreign exchange, currency markets. So Chris kind of showed that the emotional or the cycle of the economy. Crypto assets, I would say they're just sped up 10 times. So it's the exact same things: hope, belief, euphoria, down to despair, depression, and then a revival. So a lot of people saw Bitcoin's value in the entire space kind of crashing 50% from all-time high back in January. We're still up 10 or 15 times on the year. So those cycles happen. It gets up to $20,000, it got all the way down to $6,000, and it was at 11K this morning. So those cycles are just incredibly sped up, and using technical analysis, since there is no cash flows, there is no dividends or quarterly reports coming out for these things, this is all narrative based. Everyone's trying right now to value in what is the addressable market. What is a digital gold worth? What is that worth if you're able to have a Swiss bank and you're able to have a programmable financial infrastructure that's way more efficient than a legacy system? How much is that actually worth? Yeah. So that's kind of the last one.
So here's where we stand on our fund. We're only taking qualified client credit investors, $100,000 minimum investment. We have a very minimal lockup period in this space. A lot of funds in this area are doing a 1 to 2 year lockup with a upwards of a 3 to 4% management fee, as well as a 30 to 40% performance fee. So we're really looking forward to really grasping a piece of this market by telling people, hey, we got some of the best terms in the industry, given the fact that a lot of people are locking up their money for 2-3 years in an industry where a lot of people are uneasy about it, and we understand where people's kind of uneasiness comes from. And we give people that ability to say, hey, that's what you guys like, and this is what we've heard from all our investors, is we want the ability to, if we don't like it, we can get out, so we made that available to them. 2% management fee, 20% of the performance fee, and yeah, that's where we stand. I think that's all she wrote. So questions, guys? Thank you so much.
Go ahead.
Yeah, no, I was gonna say, any questions that you have for either?
You mentioned the arbitrage, scenario, and the fact that there is a lot more opportunity for that in this, kind of young market. What kind of exchanges are you guys using to arbitrage against?
So there are multiple different cryptocurrency exchanges that we're using. Top 4 of the exchanges is what we use. So we can tell you which ones if you want.
Yeah, what 4 do you use?
We're using Binance, Bittrex, Gemini.
What kind of return on investments they had in the past, and what kind of return on investment you expect in the future?
For the past, I've had a crazy amount of success in it. I mean, I purchased Ethereum when it was $7.30. I purchased Bitcoin when it was at around $300. So I've had a pretty crazy return in this space. But as everyone knows, past performance doesn't dictate future performance. And that's the good disclaimer that I have to include there, is that that's always the truth. We don't have a benchmark on what we think it can be, because we think this market can really take off, but at the same time we have no expectation of anything. And anyone that gives you an expectation in this space is really just giving you a cold shoulder and not really wanting to tell you straight up. So I've had magnificent returns, upwards of, I've had some coins go 100x, I've had some coins go 200x. But at the same time, we look at it and say that's not all that matters here, is we're not looking for the quick buck. For me, I've been a firm believer in the technology ever since. I know this entire team is very big supporters of these technologies, because it's beyond just the idea of what money is. There's a million ways to make money. We all come from successful businesses that have done extremely well, and we look at it and say, how is this going to revolutionize the next 15, 20, 30, 40, 50 years and transform a global economy that has failed a lot of people around the world? So that's really where we stand at.
I think something, putting it, kind of comparing it to legacy markets is a good way to put it into terms. So Chris talked about volatility creates opportunities. So the only thing that I know is going to happen with the market cap and with cryptocurrencies is they're going to continue to be incredibly volatile, right? There's no intrinsic way to really value these things yet. So being able to take advantage of that with arbitrage, with technical analysis, and kind of creating those proprietary ways to also value ICOs, that's where you're able to capitalize on the volatility. They're incredibly inefficient markets so far. Other markets, traditional markets, equities, hedge fund managers are fighting over 1 or 2%. In this space, you're seeing currencies do 30, 50 times in the year.
How is the IRS treating these trades? Is it short-term, long-term capital gains? Like,
But so they're treating it typically as depends which CPA you talk to, of course.
They were doing 1031
There
exchanges,
you
but
go.
now it has to be ordinary income.
There you go.
okay.
Through
But 12 months.
2017, correct? Is that?
Through
Yeah, starting in 18, I believe.
Starting
Yeah.
in 18, correct.
IRA, you could have an IRA.
I don't know about
They,
that.
I've seen ads for it online. I don't know.
Ads for what?
For like coin IRAs.
ICOs?
No, like
IRAs for the
Bitcoin
tax
IRA
Yeah.
is a website.
That'd be place to
That's what's
Yes.
interesting. A lot of that stuff stopped the advertising aspect of it all is because they're seeing there's so many. As again, it's an imperfect market. There's people that try to take advantage of some people and put different coins, different offerings, different IRAs, different. Oh, we can put you into blind trusts and have all your coins go in there and everything's gonna be fine. So there's a lot out there.
How's the IRS tracking it? There's no 1099, you don't hold it at Schwab or Fidelity.
So a lot
How
of
are you
these
tracking it?
a lot of these exchanges offer like Coinbase, for example,
Yes.
offers a full trade history. You print out the trade history and it'll tell you what you buy it at, what you sell it at.
They also require.
I got one
Trading
from a
that's
client
something
that's it looks like a normal
Yeah.
gain loss,
And are they
Exactly.
filing that with the IRS like?
Last
the
year it was
1099?
over 20,000 of withdrawal. They Coinbase sent report.
14,000, yeah.
Was it
14,000.
14,000?
It was 14,000.
It's the exact
And
same
also
thing.
depending on the exchange, they won't let you trade without some pretty good evidence of who you are as an identity.
Yeah,
So-
all exchanges except the decentralized exchanges that are out there are requiring everything. Social security number, your address, your ID, your verification, who you are, who's trading behind it, who's the face behind the computer. So they want to know everything, and I think that's the end of the day that's where we see this becoming a global market in the space. I mean, it's becoming a recognized currency. So.
With time and familiarity and growth, do you think the volatility starts to diminish a little bit?
Yeah, I think it will, but I think we're pretty far away from that. So just in the events that I've been to with managers that I'm talking to, a lot of institutions and a lot of, you look at pension fund, there's a lot of things that they can't check the risk box yet, they can't get in.
Yeah.
So it's still dominated by retail traders, retail investors. Until there's a real way and there's mass global adoption, I think it's going to continue to be incredibly volatile. There's just no way to intrinsically value, like you said. Apple comes out with dividends, or Apple comes out with quarterly reports. All the analysts are crunching those numbers to kind of come up with a fair value. My definition of whether it's a programmably financial infrastructure and it's a digital gold, maybe someone else views it as something else, and they kind of create a different value there. So.
It seems like the bigger value or the biggest value in this whole movement is the blockchain because banks are using it. I mean, the real estate industry, if it eventually adopts it, you won't need your traditional realtors to do these jobs. I mean, everything will be, coordinates on GPS will be on this blockchain, and you'll be doing transactions of real estate deals between peer-to-peer, which is mind-blowing.
Yes.
And there's not any discrepancies with lines of property lines. I mean, it's the movement of the blockchain, I think, is what I'm doing, like why I'm researching this. And there's a company in San Diego in December that came out as Illumina, and they have a division called Luna Coin, and they are going to fund people to donate blood because they're going to do like a 23andMe mock company to get people to give up their data. They're going to compensate them with coins, which can eventually be traded for Bitcoin. I'm thinking this is just incredible. I mean, if you these utility coins or these asset coins, not currencies, but a lot easier for me to start my insurance company focusing on this and doing an ICO, raising quick capital quickly, than going more in the public route.
Yeah, I mean, I like to think of it as, are we moving more towards a digital world, or are we moving more towards, paper? With the legacy system, if you want to set up a trust or set up any type of kind of agreement between parties, there has to be a level of trust. You have to hire a lawyer, and you have to come in and tack these rules on. You both have to sign a document and agree to it. Right now, that takes one line of code, and that's it. That's a contract made between me and you. I don't have to trust you. I don't have to know you. It's executed when I fulfill my side of the deal. When I sign, send over to you. So, that's where we're going.
Titles could become contracts like that are private keys.
titles, trusts.
escrow. I mean, the whole idea of the real estate market's a massive mess. When it comes to accounting, when it comes to
Voting.
medical records, voting, we're seeing there's a new platform actually launching a new ICO that's coming out as a voting protocol that's going to be, revolutionize the idea. Forget this whole Russian scandal. Forget the whole scandals that are going on. I mean, you put voting on the blockchain technology. How more accurate can it get?
It eliminates fraud. Everything is transparent. If everyone's vote was verifiable, you submitted it, and I could, you signed it with your private key and somehow verified your identity as well. There's no way to fraud the system. Everyone can see it, and it wouldn't be added to the blockchain if it wasn't verified by the entire network. It costs too much to fraud the system.
So when does it become stabilized? I mean, obviously, if there's so many Bitcoins, there's got to be some giants in the space that are adding to this volatility to take advantage of all the newbies coming into the space. I can only think that gold, like physical gold, the reason why it's so stable is because there's a limited supply. These miners out there know exactly kind of what they're going to get if they put drills into the ground to physically extract gold and silver. And I think of that as these cryptocurrencies, that there's only so many coins left. I'm kind of confused why you can't determine exactly what the price of the Bitcoin is going to be once X amount are going to be mined, and why somebody can't say once they're all mined, here's exactly what the price is going to be. So and then it would be more stable and more of a store of value, like you're saying, versus like this volatile, what we're seeing right now.
Yeah, it goes back to people are trying to right now value in what is the addressable market. So how many people and how many companies are going to use this instead of paying JP Morgan and Chase hundreds and hundreds of billions of dollars to store their money in offshore accounts? It's hard to kind of understand or appreciate the value of Bitcoin in the US. Imagine if you're in China and you're a multimillionaire and your currency or your bank account can be devalued 20% in the span of a year just because they print so much money. How attractive is it then to hold all your funds in cryptocurrency where there's no way they can print more than 21 million? I have no idea how much gold is in the world. No one does. They
mine more gold.
Keep finding more.
We mine more gold than the supply every single year.
Same with the U.S. dollar. Any central bank, if the economy slows down, they can always there's always a stimulus program that's always going to print more. The dollar's been losing value for 70 years. Bitcoin, there's verifiable. There's only 21 million coins, limited supply. They're trying to factor in how much demand there is, and
I'm sure these guys will stick around if you have any questions afterwards. Let's give them a hand. So I traded in baseball cards with my buddies. My kids traded in Pokemon cards, and now we're trading. I'm good. Just a little disclaimer. We have done no due diligence in this space, and we have done no due diligence on this fund or these guys. So for what it's worth. But I thought it would at least be of interest to bring something in here. Hopefully got something out of it. I know a lot of it went over my head, but the more I hear, the more I start to catch on to it a little bit. So I do think it's probably here to stay. And we probably do have to jump on the bandwagon at some point, or at least understand it, if not invest in it. But anyway, so next month, it's going to be here, us? Okay. So next month, we're actually going to present Cornerstone Diversified Portfolio, which is our fund, our diversified fund. For those of you who don't know what we do traditional wealth management. More than that, we do a lot in the area of private investments, real estate in particular. And we have a fund that has a diversified portfolio of all of that stuff, private investments. And that's been going for about 6 or 7 years, and at least once a year we do kind of an update on that. So if you want to find out everything we get involved in, which isn't Bitcoin yet, but everything else, that's a good one to come to. So that'll be next month. So
what's the date of that?
March 21.
March 21. So we'll give an email to you. All right, thanks for coming, and enjoyed it. We'll see you next month. Huh?